Good morning. So I would like to pass the word to the moderator of the plenary session, Mr. Rahul Garella, Chief Commercial Officer, International Market Strides. Welcome to PharmaSynergy, and over to you, Rahul. Thank you.
Thank you, Christina. And listen, I'm feeling a little bit left out seeing all of you in person at the event. But nonetheless, let's get started. It's a very nice, bright, sunny day here in London. And it is a pleasure to be, to be chairing the session, kicking off PharmaSynergy on the day two. And I'm delighted to, we have a really exciting session lined up and a valuable cast of speakers who will take us through their presentations. Just to set the context, and this is no surprise to any of you. Listen, our industry was founded on the principle of making medicines more affordable. And the generic industry has always prided itself on cost containment and innovation, and as the key drivers. And as we look to the future, to be able to drive sustainable growth and to carry on adapting and growing in the days and the weeks and the years ahead is a challenge, and a challenge that our industry has very adequately adapted to and overcome in the past, but the future is not the past. And so really, I'm really excited to welcome our speakers who will share their perspective on how to drive future growth and success. Let me kick it off. So, all the speakers and all the participants, a warm welcome. And let me introduce now our first speaker, Alejandro Alonso Delgado. He is going to speak to us on how to make a diversified $2 billion company grow at double digits. Alejandro is the Global Director of Portfolio Management and Business Development at Insud Pharma, and has been working in the pharma industry for almost 20 years. His professional experiences range from his biotech startups to being the CEO of Life Pharma. He holds an extraordinary PhD award in organic chemistry and an MBA. And in his free time, as you'd expect, he enjoys reading books about astrophysics. So Alejandro, over to you.
Thanks, Rahul, and thanks for the PharmaSynergy team for having me here. And it's great to see many faces that I know, and many faces that I would like to know in person. For me, it's the first time that I see people, actual real people, not on a screen, almost for the last 2 years. And it's a wonderful experience to get to see people, get to see faces, and trying to go back to normal. If normal is the welcome that we have in Amsterdam yesterday. Okay, but that's another story. You can go online and you can read the news to find out. So as Rahul said, my talk today, and I wonder if could be possible to project a little bit the presentation here. Okay, my talk today is actually the question that all of us has. Okay, each company has its different size, each company has its different capabilities and its different challenges. And all of us want to grow, and all of us want to grow double digits. I don't know why, but that's the threshold. Okay, everyone needs and wants to grow double digits. And I will briefly explain how we're doing this at Insud. So let me explain you a little bit about Insud, the Insud group. Insud is the brand of the corporate for a company that most of you, for sure, you came across during your lifetime in the industry, that is Chemo. Okay, in Insud, we have basically B2B and B2C businesses. Okay, on the B2B side, we have Chemo, in which we have API, we have generics, finished dosage forms. We also have OTC products, and we even have a small veterinary business. Then we have MapScience. MapScience is working also on this space, but on the biosimilar side of the question. So here we have a B2B clear segment. And then we have on the B2C side, we have Exeltis. Exeltis is our branded business. that focus initially in women's health, and we will see how we are transforming the product in order to grow, to move into, in this case, the CNS space. Okay. Insud and the overall group, and Chemo in particular, we have a manufacturing mentality, okay? For being competitive from the generic industry, it's critical that you're vertically integrated. The price pressures are there, and the need for a fast and reliable supply chain need to be established. So we did so by having today 18 manufacturing sites all across the world, okay? So we have a B2B and a B2C business, and we are vertically integrated. That's some of the capabilities that we have in the group. And more importantly, and with the changes on the regulation happening so fast, this is one of the key capabilities that we have in the group. So we have a massive, I would say, regulatory team. There's 250 people between rec and pharmacovigilance. We handle a significant number of dossiers per year. Today we have 8,000 dossiers alive. And others we have 500 to 600 new dossiers submissions per year, constantly over the last 5 to 6 years. And we can handle on a regular basis more than 1,000 variations per year. So we have the manufacturing capabilities, very good regulatory capabilities, and also the commercial capabilities, both from B2B and B2C. And with these questions and with these assets, we have to address the question how we grow double digits. And one of the issues that we have is that we are starting almost from a 2 billion base. Okay, and growing double digit means 200 million this year. Okay, means 220 million the year after, means 250 the next year. So you need to find yourself a way to grow in a sustainable manner. And given the fact that we're a family-owned business and not a private equity-run business, of course, you do strategic M&As, but growing through M&As with a huge leverage and the like is outside of the scope. We will do M&As, but has to be some targeted that adds value. So let's look at a little bit of the markets and the challenge ahead. Okay, and let's start with first the Chemo side of the equation, the generic side. If we look to the major generic market in the world, that is the US, you can see that the blockbusters, the classical products with making more than 1 billion, are hundreds. That's it, okay? If you look at the slides that you have already on your screen, you can see this doesn't really follow pretty much the normal distribution curve, you can say, with a peak in the 100 to 250 million, in which you have 200 products, 200 to between 250 and 500, just 100, and between 500 and 1,000, only 80. So if you add that up, you end up with roughly 500 products that make the most of the market in the US. That's on the value side of things, but then you have to go to the units and bear in mind that we have to manufacture and we have 18 manufacturing sites for doing so. You can see that the majority of the products have extremely low volumes. Okay, there's 100 products who have 10 million or less of standard units, whether this is injectable, whether this is pills, so this is small volumes. And yet you can see that the majority of the products are concentrated on the low volume side. The low volume side, I mean less than 100 million. You have quite a handful, but with significant number of units, you have only 10 products who are making more than 1 billion units, and you have the paracetamols of this world and the like, okay? Then you have between 500 to 1,000 million, only 5 products, and between 100 and 500, only 27. So this means that not so many products, many of them with low or small quantities. And when you have little products, slow quantities, this means fierce competition, okay? Everybody wants to recoup the investment that they done in R&D to develop the generic, and there are not so many units to be shared. And if there are not so many units to be shared, prices drop. And the one who is more vertically integrated will win, and the one who has the most cost control, he will make it happen. And this is a clear example. Let's look at one of the most successful products in the industry right now, Eliquis. Patent is going to expire relatively soon, 2026. You see beautiful performance, over 3 billion, product growing every quarter, 3 billion per quarter. I mean, massive product, massive volumes, but reality is that We're in 2022 right now. There's over 20 dossiers already approved. There's 34 API suppliers, okay? And we are still 4 years to go. So we will end up with 30, 40, 50 dossiers, you name it. Each of them will have 2 or 3 or 4 licensees. So this is the reality. Always large products, even with large volume, can become a nightmare, okay? So many of you heard, and this is kind of old-fashioned because I'm approaching my 50s and I need to upgrade my literature, but this is like a red ocean industry. At the end, you end up with low volumes. This means massive price drops. So what do people to face this? Okay, some companies decide to start earlier. I'm earlier and I'm the first to arrive to the party, so I can be 5, 6, 7 years ahead of the patent expiration with the dossier ready to go. But this means that you have an opportunity of cost of allocation of capital because you're investing very early in an asset that is going to stay idle for a significant number of years. And of course, if you start earlier, you will have higher development costs because API prices will not drop so much. And at the end of the day, this reinforces, okay? So this is like a huge complexity that we have in the industry right now. There's many people, many players. Everybody likes the good products, and it's not easy to compete on this industry, okay? How we do it? Okay, we thought about the options. We have a very good infrastructure that we can leverage upon, and we believe there's only 2 ways to go, okay? Find the niches, and usually niches come with complexity, okay? So we have decided to go complex. If you go complex, this means longer development time, higher R&D risk, even from a generic standpoint, and we'll show you a couple of examples. This means much more R&D investment, much more people on the R&D side of things, okay? And bringing skills that you don't have, and the need to attract talent globally, because where your company is located might not be there. So this is going complex, is complex across the different functions, okay? A good quantitative measure of complexity. Okay, we're a private company, we don't disclose numbers, but if we are in a 2 billion range, you can think that we have to invest significant number and grow in this double digit that we promised. We have to invest significant numbers on this, but you can see that the intensity of the R&D expenditure of the group has gone up significantly and will be the same in the next year. So basically, we pretty much, in the last 2 years, from the pandemic side of things, we increased R&D expenditure by 65%. Okay, so that's remarkable. And let's see one example of course, I'm going to show you the beauty things. Okay, I'm going to show you when we've been going complex, if we've been successful. I will not show you when we go complex and the product fail. Okay, but we all know that the complexity and the R&D has 2 sides. Okay, and we always show off only on what work out well. So here you have example of successful going complex approach. So we managed to be the first generic on the Spiribi hand inhaler in Europe and also in Australia. So this is inhalers, you need a medical device in combined with the formulation of the solid. So this is quite a complicated project. And the proof of concept that is highly complicated, you can see that the patent expired in 2012, but the first generic arrived 2016. You can see the massive difference with the Pixaban that we just saw before, that 4 years ahead, there was 20-something dossier available. In this case, the first generic to arrive to Europe was 4 years after the patent expiration, okay? This is not because the people didn't realize it was this opportunity didn't start. The significant number of companies who started, the significant number of companies who failed, and companies who put hundreds of millions down the drain because they didn't manage to make it. So we managed to make it on August 2016. As you can see, the second generic to arrive to the market, it was approved in January 2019, but this is extra complexity because in some countries, these products cannot be substituted. You need to be promoted. This is a primary care promotion. So even the development is extremely complex. In some countries, you can go tenders, but in other countries, you need to partner to promote. So this means that we've been alone in the market for the last 5 years, okay? It's the same for 2022 budgets, okay? Because of course we have an impact from the competition, but it's a significant leading position as the only generic in the market in Europe for 5 years. And here's where the complexity is paying off, okay? Let's go for another example. What we call Excel ring. You know, the original product is the Nuva ring. This is for women's health. This is a ring contraceptive. Ring technologies are not so easy to be developed. We manage even to improve the product characteristics without the need of refrigeration. And this product fits very well with what we want to do. We want to go for complex projects. In this case, it's aligned with our capabilities on Exceltis, because Exceltis were focusing on the women's health space, and this is a women's health product. And also is a product that requires promotion, so help us also with the B2C part of the business. And we see that we managed to develop the product and we already obtained a market share that is north of 50% or in the range of 50% right now, and it's still growing. So we're taking over the market, and it's a high barriers, entry barriers market, because the market is not so large. It requires promotion. It's a branded market in many of the countries, and also the technology barrier is significant. So you can end up with a product in which you have a clear first mover advantage. Okay? And that's something that we're aiming for. So for the chemo side of things, what we try to do is being different. We try to come with smart niches. We try to come with generic plus products. We try to come with differentiated approach in which, without impacting sometimes on the substitution, or sometimes focusing on branded companies who can take over the products, make us to have a sustainable competitive advantage. Okay. And given our size, sometimes sustainable competitive advantage has been high, very cost effective, but sometimes it's having something unique that you can even have a patent that you can still play on the generic side of the equation, but that you manage to captivate the market. And we keep always, when we do this generic plus or differentiated products, we keep, and we do a lot of extensive market research also with the physicians. If the physicians like the product, at the end, the volume demand is going to be there. Okay, so we're trying to find why not, if it's the same price and this is better for the patients, better for the physician, and they're more likely to prescribe, the market will be slowly drifted towards where you are. Okay, and that will help you to have a sustainable advantage. On the biosimilar side of the business, so mAbxience. Okay, and here, well, you have an excellent biosimilars conference that is running parallel and started yesterday. Here as well, this is a different animal. This is, again, goes with the going complex, go with the high R&D expenditure, goes with the risk assumption strategy. We know that the biosimilars market is highly competitive. In the past, there was this question mark whether it will be a substitution market or not. It seems that the market is clearly going through our substitution and is playing in the similar terms of the generics. So at the end, whoever has a cost advantage, we will win in the long run. And in this case, for us, coming from the manufacturing perspective and coming from the generic angle, will help us to have this cost consciousness on the development, under control, and in the mindset. So we managed to develop the product successfully. We have two already in the market, and then you have significant pipeline that is ongoing. In this case, is slightly different. It's a long-term investment. The products take longer to develop. And again, you're flipping the coin. Usually there's a little bit less competitors, but that's not the case anymore. On the big products, you still have 7 to 10 players already with those years available. Okay. So for us, it's all about the group's DNA. I don't know if the DNA selected us or we selected the DNA. You never know. But at the end, cost efficiency is key. Okay. And cost efficiency comes with agility, flexibility, speed, and delivering and execution. Okay. So this is the key to make it work. Okay. But we always keep the cost at the top of the equation, because for making sustainable is key. And on the brand side of things, okay, we have a direct presence in north of 40 countries, and with almost 3,000 reps scattered all over the world, worldwide. Okay, so we have a very good coverage. You see, big presence in Latin America, in which we thought that it was a great opportunity. We managed to complex, and today is one of the key drivers for Exceltis and the key drivers of growth. Out-pocket markets, with its characteristics, and the US that is more innovation driven, Latin is more branded generic oriented or cost control oriented because the healthcare system are not reimbursed and patients have to pay for it. And Europe, that is a combination of both, depending whether it's Eastern Europe, Western Europe, Southern Europe, or Northern Europe, is a differentiation with this. So the way to compete and to grow for us is on proprietary innovation products. This is the case of Slinda. That is the first innovative contraceptive for the group. We launched Slinda worldwide, and this opened a new option. Slinda is making north of 200 million right now. So we're very happy and growing more than the high double digits as we're talking, but Slinda also opened up a new business for the Excelti side for the branded thing. That is the option to partner in geographies in which we're not present or just present as a B2B franchise, like Canada, like China, Japan, Korea, or Australia. Okay. And what is now for Exceltis? Okay, so Exceltis was set up in 2000. Then it went through international expansion. So that's a driver of growth. But nice, when you're now in like 40 countries, we managed to open the last affiliate that we actually wanted, big one, that was the UK. It started this year because UK is an innovation-driven market and you need to have the right products to go there. But now we cannot internationalize anymore, okay? We are pretty much everywhere. I don't know if Mars is getting popular right now, but there's not too much people, okay? So the next thing for us is change the therapeutic area. And we are strongly focused in CNS right now. We have a good portfolio of products and a good pipeline that is kicking in. And we're starting the rollout. This year, we start the rollout in Mexico. We already have some CNS presence in Spain and Chile. And next year, we'll start with Poland, with our Czech Republic. We will start also with the rest of countries in Latin America. And in 2025, 2026, as soon as our internal developments and the licensed products arrive, we will do the global rollout for the rest of the world. So the focus right now for us is moving into a new therapeutic area in which continue with the growth and expansion into the women's health, in which we are willing to have a leading position. And we are already in one of the largest companies in that particular space. And we have a significant pipeline of products in that space. But the only way for us to grow is to move into another therapeutic area. And I think I made it on time. And that's it from my side. I'm open for Q&A.
Thanks, Alejandro. I think we're taking Q&A at the end. So if you have questions, please either send them over on the chat or hold them for the closing session at the end. Let me also now, Alejandro, thank you for that very enlightening presentation. I'd now like to welcome Deepak Mansukhani. And Deepak is going to talk about managing complex portfolio management through business development strategy for the international markets. Deepak is a senior director and head of business development, licensing and strategic partnerships at Cipla. And he brings with him 15 years of strategy and management experience roles, including 7 years in cross-sectoral management consulting with BCG and Accenture. And for the last 8 years, he spent with Cipla. Cipla, as some of you would know, is the third largest Indian pharmaceutical company and a global leader in respiratory and antiretrovirals. Deepak, over to you.
Thanks, Rahul, for the kind words. Good morning, afternoon, and evening to my fellow panelists and all of you, whichever part of the world you're joining from. I share Rahul's envy at missing out on this fantastic opportunity to be in person. But in the spirit of everything happening, all collaborations happening digitally nowadays, let's proceed. So as Rahul mentioned, I represent the international business of Cipla at 2.5 billion plus. We are one of the largest generics globally. I run the business development and strategic partnerships for the international markets. I'm indeed privileged to be presenting at such a prestigious club as Jane called PharmaSynergy, and the who's who of the pharma industry is here. I think in these unprecedented times, the pharma industry has actually risen above and beyond the traditional models and come together like never before, right? I'm sure all of you will agree, the kind of collaborations and partnering initiatives we are seeing at a pace unheard of. And incredibly, all these collaborations or deals are being sealed almost entirely virtually. So I'm really excited to be sharing some of my thoughts and experiences on this topic. And more than that, I'm excited to be listening to all of you because you all are the leaders of the commercial and BD functions. So can we go to the next slide, please? So a bit about emerging markets, right? There is a reason why there is so much noise around these parts of the world, and why emerging is increasingly becoming a core business for most multinational pharma companies. I was looking at the global outlook for emerging markets as per experts, and it seems that most experts agree that there can only be two ways where emerging markets can grow. It is either moderate to strong or strong to very strong, right? So while the developed world can vary between strong to weak growth in terms of pharma business outlook, the emerging markets have to be growing. And we obviously hope that the worst case scenario does not play out. But obviously all of us agree that the most likely is a scenario where the developed world grows moderate while the emerging markets grow strong. And incidentally, it's ironic that this prediction is about to be proven true as we stare at the cusp of a Cold War being played out, right? So our international business, it is the youngest, but definitely not the baby of global Cipla. Widespread and complex presence is a mild term to describe our operations in international business, which spans emerging markets and Europe in the context of Cipla. So we like to think of ourselves as the millennials among the 4 geographic BUs that globally Cipla is structured into. It's a young, relatively young organization of 800 plus people across 30 countries, running an agile business with loads of appetite to experiment and grow. I heard my previous panelist Alejandro also speaking of the need to grow, to double, right? We are at a similar size and with a similar aspiration. Obviously, we have a very scattered presence, and it is rightly said that the sun never sets in our international business, right? Our presence spans the 24 hours of a clock, from Mexico in the far west to New Zealand in the far east. Our front-end teams and strategic aspirations are in at least 20 to 25 of these markets, while we are present in totally more than 50. Obviously, we need to select the deep ones to play in, right? So what we call as core or deep markets are about 20 of these, and that's where I would focus the rest of our presentation on. Can we move on, please? So with the kind of complexity in commercial operations, as I explained in the previous slide, comes complexity in portfolio management. And our base portfolio is mainly derived from our global pipeline, which is for the US market, it is on complex part of the generics, while on India, it is branded. And a mix of this base portfolio is what we offer to our international customers or our front-end markets, right, across emerging markets and Europe. Now, while the base can be derived from our in-house pipeline, the incremental portfolio is what really needs an agile and smart management of market needs, and that obviously needs to be balanced with complexities of portfolio development that all of you are aware of. So we broadly segment markets on the basis of their regulatory pathway and our commercial model. So as laid out on the slide, and all of you are aware, there are many of these emerging markets which insist on EU CTD dossiers and sites, especially like Australia, a lot of markets in Asia Pacific, LATAM, MENA. And then there are some of the markets, and shrinking in number, where EM or WHO approved dossiers and sites are acceptable. And that is where we try and leverage our India portfolio. On the commercial model, as I said, we have a B2C or a direct presence in about 20 markets in these international, in the world of international, where we have our own commercial team and front-end infrastructure, and where we sell Cipla branded products. The portfolio play in these direct core or deep markets pivots around respiratory, which is our claim to fame since years. And we pride ourselves on the fact that we have the second largest manufacturing capacity for inhalers globally after GSK. So typically our portfolio play in the deep markets is pivoted around respiratory and focused on a couple of other therapies, mainly shifting towards chronic, whether it's cardio diabetes or your oncology, urology, or even CNS in some cases. On the B2B side, which is where we operate through partners, typically our portfolio is therapy agnostic, but still respiratory will continue to be the key. So we want to make respiratory a borderless play for us. It is a pan-Cipla, pan-geography approach where a central focus on respiratory portfolio and pipeline is invested. Can we move on? So given these varying needs on the market side and the complexity that comes with emerging markets, is BDNL different from for a fragmented geographic presence, the way what we are referring to, right? There are broadly a couple of parameters which need to be understood when you consider BDNL strategy or BDNL driven growth for emerging markets. First, on the market side, there are a set of strategic questions we need to answer to arrive at a wish list of what we desire in these markets from a BDNL portfolio, right? First question, are we having a clearly defined right to win? Most of these emerging markets, remember, are VUCA, volatile, uncertain, extremely ambiguous. The political, the regulatory, the legal environment, you cannot predict. So what is our real right to win? Are we among the top 5 players in terms of size? Do we have the scale to attract and grow a portfolio, at least a basket? Which therapy do we have deep capabilities in each of these complex or VUCA EMs, right? The other aspect to consider is the revenue recognition aspect. A lot of these markets require local entities, local legal entities. So what is this? What does that translate into? Do you need to set up a JV? Do you need to set up a distribution entity? Do you need to set up a manufacturing entity, right? And then there is obviously, especially in a post-COVID environment, there's a lot of protectionist agenda. A lot of markets insist on localization, increasingly import quotas, pricing caps. You're aware of all this. So we need to answer some of these strategic questions before arriving at a portfolio wish list for these for a BD driven growth. And then on the deal making side, when you're trying to attract complex or differentiated portfolio on BD, a lot of these innovators do prefer regional or strategic partners. Now, given the kind of fragmented presence we have, how do we position our capabilities? If for example, an innovator wants to give us the entire APAC for a certain product, would we have the same capabilities across small markets like Sri Lanka versus large markets like Indonesia? Does our model vary across markets? Also, we need to bear in mind that if we are opting for a ready MA kind of a deal, they are typically margin dilutive. So does our financial mix allow that kind of a deal structure? So after considering these questions, can we move on, please? What we arrive at is, Jane, can we move on to the next slide? Yeah. So what next? Once the wish list is defined for specific deep markets where you want to have a direct presence and attract BD driven portfolio, how do we approach the various collaboration models? As you see on the slide, we are following a pan model strategy, which means that we are not hung up about only owning the MA, which comes with a licensing deal. We are also okay with a ready MA where the partner has already registered the product but has not commercialized it, or maybe may not be doing justice to the product, right? So we also approach some of the markets for a ready MA kind of a deal, which is typically takes the shape of a strategic basket deal where the innovator continues to own the MA, and the key success factor is what is our pitch, what is our right to win. And I've seen from my experience, we've done a couple of very big strategic deals in Australia, which has been a deep market for us. It has grown 4x in the last 3 years, and mainly riding on this kind of deals. And that's why I want to spend some time on it. The key success factor here is also the commercials and capability that you bring to the table. Because why would an innovator give you something in a deep market when they would already have a basket, right? And then there are the M&A kind of deals where we acquire assets from a target. It could be on just the IP and MA. It could also involve manufacturing. Again, it depends on the strategy you have at a market level. How well positioned are we to execute this kind of agenda, the BD agenda, as a strategic growth driver? Can you move to the next slide? Jane, can we move to the next slide? Yeah, thanks. So what we've done is segmented regions, as I said, those top 20 to 25 deep or core markets, we have segmented them with respect to the portfolio strategy so that we have a clear mandate for sourcing deals from BD. Now, whether it's a licensing deal or a distribution deal or even a strategic deal, including M&A, depends entirely on the strategy of that market. For example, for mature markets like Europe and Australia, where we have a direct presence, we would typically be therapy agnostic, but look for differentiated products. The time selection is the key here. Complex products which can, where we target a day one launch, right? For a market like Brazil, we are focusing on institutions, where again the patent cliff is most important, and we look at a day one launch. Some of the emerging markets on the Middle East and North Africa side, where cost competitiveness is the key, obviously, because the most of the business is in tenders, we need a wider basket, and we also need localization. So we have a lot of JVs in this side of the world to ensure that we are not blocked out by the import quotas or price restrictions. On the APAC side, we are again looking at cost competitive products, which may be on the acute or chronic basket, but we need a deeper basket, right? It's more of a basket approach, right? And China is a different ball game. Again, needs right time selection, less, we look at products where there is less local competition. We try to optimize investment and life cycle of the deal so that the NPV makes sense. So I've laid out some of the guiding principles that we have been following, and this is how we typically lay out the scope of our BDNL approach. Obviously, my team is responsible for everything inorganic, right? Everything that comes from outside, whether from licensing or from ready MAs or from acquisition, falls in our basket. As I told you, we have defined a very specific mandate for the strategic deep markets, the smaller deep markets where we have a direct presence, and then we are also getting into the B2B space. Like Alejandro mentioned, you cannot be ignoring the B2B or partner-driven portfolio. A very interesting aspect, unlike many other companies, we have almost a 50% contribution from B2B business. And that is something where we have a presence in some deep markets through dedicated partners, long old time partners. So we have started actually custom developing products for our partners and also in licensing for B2B. That is a very different approach that we have recently started. We obviously look at the patent landscape for a day one launch. We look at differentiated formulations from strategic partnerships, the kind I mentioned in Australia. And as I said, we are extending partnering rights to markets where we have a strong partner. Can we move on? So where are we headed with all the kind of complexity in emerging markets and different portfolio needs, different strategy for each? How is BDNL contributing to Cipla's international growth trajectory? I've given you an example of one of the deep markets where we have already done a couple of strategic deals, and we are doubling the growth in the next 4 years, right? Doubling the revenue, sorry. Look at the parts of the graph adding up between strategic basket deals and in-licensing launches, the top two columns, right? The light blue and the yellow. It is going up to 50% of the revenue of the market. That is the kind of focus and investment towards BD. And as I said earlier, there is a wish list portfolio defined across therapies, depending on the market, the commercial model. We've already sourced more than 50% of that portfolio over the last 2 years. And the kind of products we have sourced are all complex, differentiated, day one launch. So they address more than 10 billion in market size. And this spans obviously across biosimilars and small molecules. An increasing proportion of new launch revenues coming from BD. The big difference that I see from BD driven launches versus in-house is that you can actually get very streamlined and quick access to differentiated portfolio through BD. And through this, especially in some of our deep markets like Europe and Australia or Morocco, we have been able to generate a staggering success ratio of new launches. Going forward, we plan to streamline our focus on complex and patented products, as well as some of the custom development deals. Can we move on? So how are we leveraging what kind of learnings do we have from the successful execution of the kind of deals I spoke of, whether on the licensing side or the strategic basket side? Very important learning. There has to be a core fit or a strategic fit in some of our key markets. If we cannot answer the question, why are we the best partners for this product, we will not be able to negotiate a good deal. We have followed very transparent open book approach to dealing with some of the biggest partners globally. Open book to the extent that we lay out our cost base, our operating expenses, our launch plans, our marketing investments, and same for the partner as well, right? And that's the only way to arrive at a win-win commercial deal. We also try to make it a flexible model, and the resource commitments that we give on any BD deal are based on a risk reward trade-off, that if I guarantee you or commit you an X% growth, I will back it up with this much investment in resources and marketing, etc. And if I'm not able to guarantee, if I'm not able to achieve that growth, then you are free to penalize me for the kind of margins you're giving me, right? So it's a completely win-win approach, and most important, flexible. For example, if I'm sourcing a patented product where I know that there are going to be challenges on the IP front, how am I going to play out the situation of a settlement? If we get an early launch due to a settlement, obviously it's going to translate into millions of dollars of upside for both the partner and us. But that would mean taking a risk in the litigation or settlement, right? So am I investing in something to do with the IP landscape, which will increase the probability of an earlier launch? We also spend a lot of time on business continuity and seamless integration, especially when we are doing a strategic deal involving some field force acquired from the partner, right? How do we build or acquire the right capability? Because obviously we are not you're not going to have everything, all capability in-house from scratch. You cannot build it from scratch. You cannot afford that kind of time lag. In which case, how do we integrate an acquired field force into your own structure? That we spend a lot of time on that. And finally, on a robust governance model, right? I think the leadership's investment in the deal success is the most crucial aspect. Both the CEOs can just pick up a phone. The BD heads are on WhatsApp to solve any issues. It is a complete collaboration almost. I think the acid test of any deal or collaboration between two companies is that when a CEO looks at the kind of conversations that happen, he cannot figure out who belongs to which company. That is the acid test that we look for. Can we go to the last slide? So apart from pharmaceutical products, over the last 2 years, we have also tried to keep pace with the hyper evolution of the pharma landscape. And needless to say, we've tried to leverage the power of collaborations and got into the COVID portfolio. Now, while we have a lot of molecules on the treatment side, we've also stitched together some deals on the diagnostic side. We have a rapid antigen kit, we have signed a rapid antibody kit, and as we speak, we are looking at some other kind of diagnostic kits as well. So I just wanted to highlight that the power of networking and collaborations is tremendous, right? It leads you to agility across the spectrum. To end, just an example of the kind of collaborations that we have done. The last slide, please. Yeah. So why we have been the partner of choice for a lot of companies across the spectrum, whether it's on biosimilars or on the complex side, on the peptides, on the respiratory, on the oncology side. As I mentioned, a very collaborative open book approach with a global leadership connect, followed up with a very strong regional and local connect. So this is what I wanted to briefly share with you. I hope we are able to exchange learnings and take out something from this. And I look forward to your questions. Thank you for your patience and listening to me.
Deepak, thank you for the presentation. Could I now invite Nadeem Ramat who will be presenting on creating a roadmap on how to evaluate and value the business development and licensing opportunities. Nadeem Ramat is the Chief Operating Officer at PharmEvo, and is the driving force behind the company's strategic and crucial responsibilities of maintaining a rich product pipeline. By qualification, he's an MBA and a B.Pharm with an exceptionally vast experience in multi-growth strategies in licensing, market access, pipeline, and portfolio management, and other key functions. So Nadeem, over to you.
Thank you very much, Rahul. And thank you very much, Christina and Jane and the PharmaSynergy team to organize such a wonderful event where we can find our old friends and we can find the new partners as well. Rahul, thank you very much for your kind words and introduction. We'll be talking about how do we value the BDNL opportunities. Of course, we have seen the presentation of Deepak where he has shared the enriched experience of Cipla in the BDL. And I'll be sharing some brief about how do we value on those opportunities. I'll start with my gratitude to my teacher, Martin Austin, who really taught me the BDL, and he helped me to enrich my experience and deals on the BDL. He is no more with us, and that is why I wanted to pay gratitude to my teacher. Thank you very much. How do we model and forecast the BDL opportunities? And why do we do that? The purpose is to create a quantitative estimate of the future value of the asset that we may call it BDNL deals or opportunities or the products, and those will be treated as the future value or the future assets. And here we have a model where we can quantify the estimates. What do we need to consider? How long is the forecast period? It can vary from 3 years to 5 years or maybe more than that, depending upon the product and the market. How good is the available data? That we also need to look into it. And how strong is the forecast method? And how detailed is the forecast to be? And what are the assumptions when we develop the forecasting for a BDNL opportunities? We can have data from any of the regulatory authority, for example, US FDA, maybe on the scientific side, maybe on the regulatory side. WHO data can also help us. Data monitor can give you some, of course, apart from other companies, data monitor can give you market reports, product reports, and a lot of information that can help you understand, develop a forecast. IQVIA can also give you the retail audit of a certain product or a certain market, let it be ATC level 1 up to ATC level 5. And some national statistics board can also be referred to while you are preparing for the forecasting of a BDL opportunities. We will be talking about the 4 different methodologies when we talk of forecasting: the market-based approach, epidemiology-based, health economics, or pharmacoeconomics, and life cycle-based. And we will talk about all of them briefly. Methodology 1 is the market-based, which is defined by and relies upon sales data from existing products, because we can already consider what is available in the market, and we have to be aware that how market is behaving with existing products. The integrity of the customer data is very important because we are really dependent on the market data. Estimate should be based on the market share assumption. We need to develop an assumption that are we going to have, let's say, 5% or 0.5% market share in the year 1, and it may go up to 5% in the 5th year or more than that, depending upon how aggressive you are. What are your plans? We also need to understand the competitor's marketing activity. That's very crucial in the market-based methodology. We have observed that in case of biosimilar, when there is a first bio-generic is available into the market, the originator would revise the price, and they would say buy one get one kind of a thing, and we need to anticipate that how innovator would be behaving in such kind of model. So we really need to understand that how keen is the market from competitors' point of view. And this model can be used for the new markets or new products as well. Another approach, which is called epidemiology-based approach. Here, this approach would be derived from the patient numbers. Of course, we need to understand, depending on the product that we are going to offer, that how many patients are there in a country. Is there a certain percentage of people who are suffering from that disease? Who, when, and where pattern of the disease? That's very important to understand. And trends of the disease can also help us to develop a forecast. Though details will be sketchy in the epidemiology-based approach, because it is very important to know that how accurate is the data from the disease registry, because every country has different disease registries. And if the data is robust, then we can really rely upon those to make an estimate that what number of patients are already available. And if we can have data of the competitor and we can convert to the equivalent doses, so we can see that what doses are being consumed every year and how many number of patients are already into the market. So that can also help us to develop a forecast for certain type of products and competitor data, of course. The treatment pattern followed by the prescriber, I think that is also very important. What we have observed that we need to understand the experience of the prescriber in dealing with the competitor's product. Sometimes they adjust the dosage beyond the approved dosage sometime. And they also like to use the product for the offline indication as well. So we really need to understand their experience, their challenges in dealing with the similar kind of products from the competition. That's also very important. So the third approach would be the pharmacoeconomics or the health-based approach, when we are developing the forecast, comparing the value and benefit of one drug or therapy to another one. Of course, it can be yours as well. We need to evaluate cost and benefit of the product to the patients against other therapy options. What is the per day therapy cost of the competition and your product as well, and the duration of the treatment as well. So these are very important, not only for the prescriber, patient, but also for the insurance companies, the reimbursement agencies, and the policymakers as well. So they really need to understand that how this new product is going to benefit or outweigh the existing products which are available to treat a disease. I would also encourage companies to have a calculations as well, which is a quality adjusted life year, where we can see that the quality of the life and the length of the life, how it is being affected or being improved with the use of the intervention. So you can see in the slide, the blue part is without intervention. You can see the perfect health is quality 1 with score 1. And with the intervention, you can see the yellow part where we have, of course, extended life with better quality of life as well. So we really need to understand that what is the quality adjusted life here after intervention of your product, because the insurance companies would look into it, the reimbursement agencies would look into it, and the governments and of course the prescriber would also look into it, even for the co-pay markets or out-of-pocket markets as well. The fourth methodology that we can talk about is life cycle based. It is very dynamic in nature. Indications and other features can keep on emerging. It is very sensitive to the assumption, and it requires excellent data and constant maintenance. But we need to really understand that you see the S-curve of life cycle where we have the introduction phase, the growth, maturity phase, and decline. But be very careful that before the decline, either we need to have another product in the similar therapeutic category, or we need to have an extension of the indication based on the clinical data that we can produce. But of course, life cycle based forecasting is very unpredictable sometime as well. Recently, we have noticed the consumption of paracetamol. Of course, nobody could predict the use of paracetamol can go that high, and similar is the case with the azithromycin, because azithromycin was proven to downgrade the cytokine storm in the COVID patients, and all of a sudden there was a shortage of not only for the API but the finished dosage form as well. So those products were pretty much 15, 20 years old product, but still there was an opportunity that at the end of their life cycle they were able to have a new life as well. So we need to be really careful on those parameters as well. This is a very traditional forecast model where we can see the year 1 to year 5. And how do we price the product for our BDNL opportunities? We need to be aware of the brand value proposition, the price versus the clinical benefit that we are offering to the patients and the governments and the hospital. What is the price of the competition? And what are the alternative therapies already available in the market? And what is the unique selling point in your product, whether it is a dosage form, whether it is enhanced bioavailability, if it is a faster onset of action, or it may have a lesser adverse effect. So we really need to understand our product before we can price the product. And the cost of the goods sold that we need to understand, what kind of margins that we should have so that we can cover our selling and general administration costs, and what kind of promotion that we are aiming for the product, and what will be the profitability at the end. And we need to be aware that what will be the discount rates that we will be offering to the insurance companies or the customers of the hospital or the government. So we really need to be careful while pricing the product in advance. That's very crucial. So how do we summarize what should be the key considerations? We need to collaborate with other functions in the organization, like sales and marketing, medical affairs, technical operations, so that we can really evaluate all aspects from manufacturing standpoint or regulatory standpoint or medical affairs or sales and marketing. So the BD function should be collaborating with all these functions to have a better position, better price product. We also need to agree on all assumptions with other departments, because we have seen that BDNL executives, they always struggle between various functions in order to make the projects successful in various markets. We really need to choose reliable source of the data, as we talked about earlier, whether it is Equia, US FDA, WHO, or any other source of the data that we are using. Select the best model approach, whether epidemiology, health economics, life cycle, or market-based. We also need to consider the top-down model of forecast or the bottom-up. We can say that for a certain market, we can benchmark, let's say, 10 million or 100 million US dollar, and then we can divide into various regions or indications, or we can have a vice versa approach as well. Right pricing structure, offering value to the patients and the shareholder, that is the key thing. So these are just a few considerations, the forecasting approach that we can have, and the pricing consideration that we should really consider before we value the future asset of the organization. And I think that I thought to share it with you. With that, I'm all done. Thank you very much. And we look forward to the question at the end of the session. I hope that I have saved a few minutes to Christina.
Thank you, Nadeem. Very insightful. Thanks for that. Could I now take the opportunity to invite Joe Kim? Joe is the head and vice president, supply and commercial and supply chain at Medis. And Joe will be speaking about taking a strategic approach to partner selection. And by way of background, Joe, since June 2019, since joining Medis in 2013, Joe has served as the managing director and cluster head for Medis for the Asia Pacific markets. And from an experience standpoint, she has over 25 years of experience in both MNC, pharmaceuticals, and biopharmaceutical businesses. She holds a Bachelor of Pharmacy degree from the University of Sydney, a master's degree in business and technology from the University of New South Wales, and she is also a graduate member of the Australian Institute of Company Directors. Joe, welcome to the session, and we look forward to hearing from you.
Thank you, Rahul. Good morning. So I almost didn't make it yesterday. My day was quite eventful. Yep, okay. Yeah, so my day was quite eventful. I actually live in Iceland, and we had a red weather warning storm. So my flight from 7 a.m. was delayed continuously until we finally took off at 4:30. And almost like a movie, I land here. There are red tape barricade around the hotel. And unbeknownst to me, I just walked through, and they were very shocked to see that I'd walked through. That's very empowering. Yes. So hopefully my return journey on Friday is okay, but there's still a red warning on Friday too. So I am very happy to be here, but I must admit, I haven't spoken to a real person in the last 2 years. I've been talking to my computer. So, if my habit returns, I'm sorry. So my name is Joe. So I've been with the company for over 7 years, and as Rahul said. So I don't know, most people probably know about Medis, but what I'll do, okay. So I'll do a quick introduction about our company. So we are a mainly B2B company based in Iceland. We were established 37 years ago. But we have offices in Spain, France, Germany, Italy, Greece, Poland, Australia, and Brazil. We operate in the global marketplace, except for in North America. And we do about 4.6 billion units a day or a year. We have partnerships with over 300 customers. Majority of that, 85% of that business is in Europe and 15% in international markets, or the other markets that we're referring to. We are a fully owned subsidiary of Teva Pharmaceuticals, which I'm sure you all know. But what you may not know about the head office, mother company, is their ESG programs. I just wanted to briefly touch on that because I think ESG will also become a very important feature in strategic partnerships in the future. So why is focusing on ESG right today and good for business? Because we do want to build a sustainable business, and we want to leave a legacy for our future generation and a better world. So we're leading the industry, showing our commitment via the sustainability bond that was issued recently. I'm not sure whether you read about it in the New York Stock Exchange. We do have a clear commitment to reducing energy consumption, and there are financial penalties if we don't. So it's a commitment that we give, and we're incorporating that into our plans in 2022, and we look forward to delivering on that commitment. So if you want to read more about it, then obviously you can go to the New York Stock Exchange press release. So when the organizers, I'm trying to move it. Okay. When the organizers approached me to talk about strategic partnerships, I kind of wanted to reflect a little bit on the past and on the future, but also focus on sort of the aspects of tangible as well as intangible, because obviously we've had a lot of speakers and a lot of people have experience on the tangible part, which is common across the industry. And what I'd like to do is just over the next 10 minutes or so share my thoughts. These are my views, and I'm happy to have discussions and debate around that after the topic. So, I mean, if we touch on the BD process, obviously the partnership journey is sort of what I've mapped out, whether in licensing or out licensing. and what your strategy drivers might be, it is ultimately about a product and a market assessment. You obviously have to have the financials and the analytics to begin with. And from the project ideation stage, obviously everybody, everyone here is very familiar with the analytics and the thought process that goes into the product and market selection. These series of technical tools to help you validate your ideas and the business model. And, as you want to move along the value chain through commercialization, it becomes important to select the right partner and also to assess whether your partnership is going to work. Can we or our partner support the business together? There has to be capabilities and a willingness to collaborate. So other questions you might want to ask includes a checklist of capabilities of the project, whether they have the right geographical reach, the presence. Do they have the technical teams and the know-how to execute on registration, reimbursement and launch? But do they have the right quality and compliance checks in place as well? And so on and so on. But it's not necessarily about the capabilities per se. It's about the fit. And when we talk about the fit, it's not just about your partner, it's about you internally. So in Medis, when we're looking at partnerships, we don't just assess the partners, but we also look at, do we have the support in-house to support the business opportunity? We have, as part of Teva, we have the backbone of Teva operational team that's supporting us. And internally, we have checks and measures to make sure that for each market that we enter, we have a support and a commitment to support the markets and the projects. So this is part of the checks that we do as we're looking at establishing a new partnership or on existing partnerships. It's about aligning product market demand to technical support and ensuring values and goals are aligned with our partners. Because we need to have the confidence that we can bridge the gap when we get to that market. BD have done all the good work in getting the commercials across the board. We need to make sure that on the execution, then we can also execute. And that's where I think the joint success and the partnership becomes important. And it doesn't stop there. We continue to monitor and assess the relationship. We have internal data analytics that we give access to our customers so that on a continual basis, the strategic partnership is reviewed and our customers have access to a customer portal that we established in 2015 that gives them analytics on their full orders, their forecast, and it's a great tool for us to have the transparency and the discussion with our customers when we're discussing businesses. So in today's environment with AI and Internet of Things, the baseline analytics is a must-have and a key tool for all businesses. But then what else differentiates us to ensure our partnership is strategic and sustainable for repeated success? This is where some of the more intangible metrics come into play. So diversity is a catchphrase at the moment, and everybody understands that diversity is good and it brings synergistic aspects to the business. I think diversity and understanding your partner is very similar in that you see the visible part, which is the tree or the tip of the iceberg, but there's a bigger piece underneath the ground that you don't see. So for example, you can see that I'm a female. I have an Australian accent. Hopefully I haven't lost that in the 3 years that I've been living in Iceland. And I have Asian heritage. And I think as Rahul just said, I'm a pharmacist. I went to Sydney University. On my LinkedIn, you can also see that I went to a very exclusive private school. So you have a certain image of me. But if I were to tell you now that I was born in Korea, my parents moved to Australia when I was 10. My father, the only reason he could afford to send me to the exclusive private school was because we had a bursary at the school because he was a missionary. That changes a little bit of what you see. And there are many layers. I'm like an onion, you can unpeel. And I think the point is that common sense, they say, is the rarest commodity. And it's because a lot of our background, our environment, our upbringing forms the basis of that. And if you assume your common sense is the same with your partners, then there is a gap. So it's not just about background and common sense, but also in operating in a global market, we have a lot of cultures that everybody's dealing with language differences. And, you know, how many times have you heard people say that yes in Japan doesn't really mean yes? They'll say yes, but it's not actually what they mean. And you really have to delve into that. And it's not just in Japan, it's like countries in Australia where you speak English and you think, oh yeah, I understand that person. But if you look at the list on the right, I'd like to challenge you to see how much English or Aussie you guys understand. So I don't know whether in the chat box you can put that in, but if I said to, yeah, Rona made me have a rat, or Rona made me get a rat, do you understand what that means? Show of hands, people in this room who actually know the meaning of all these words. Actually, raise your hands if you don't know any of these words. Okay, so I'll spare you the pain. So Rona is what we call coronavirus. We shorten everything in Australia. So as you can see, brekkie is breakfast, arvo is afternoon, stoked, he's excited. Budgie smugglers, it's men's swimwears. Our Prime Minister's famously wore this about 5 years ago. And I can tell you my English colleagues, English colleagues, didn't know any of these words either. The RAT is a rapid antigen test. So I think there is an aspect of this where we really have to understand our partner if we are to have a sustainable strategic partnership and to form a foundation of a common sense, you know, like a common base of a common sense. And therefore understanding not just the business and the deal and the principles of local regulatory requirements, but, you know, when the project is sailing along and you hit rough waters, you hit headwinds, it's really when you have a strong partnership and you have a really good understanding, good communication, like the previous speaker was saying, that you become one, that you can tackle the issues and overcome the problem and create win-win, and the project becomes a successful. And it has to be sustainable. And a sustainable relationship is about a 60-40 relationship. So why are these softer aspects important? We know the numbers, as I said, but to really execute on the project, we need a very close relationship. And as I mentioned in the beginning, so Medis has a long list of partners with whom we've been doing business since the day of inception 37 years ago, with other partners 10, 20 years. And whether it's personal or for Medis, for me, our guiding principle in growing a successful long-term relationship does not rest just on the tangible aspects through creating equity and mutual benefit, but on the intangible aspects through transparency and a shared empathy. This is why being able to communicate actively and engaging with your partner with a deep understanding is important. And it brings a new level of transparency when you have that good communication, and it's critical to the business partnership. And if we're partnering for sustainable success, then we need to think, it's a global product, but we need to think local and make sure that we bridge the gap with our customers and our partners. So with over 300 partners in 70 markets, and each partnership is unique, and our story behind is very varied. And so whilst we can't go into the details today, the one guiding principle, and we can't generalize, but I think the really one guiding principle is that first, obviously, the deal needs to make financial sense and it needs to be mutually beneficial. But if the relationship is to move to the next level, then being strategic and sustainable, then one of the most important criteria for me personally is trust. Trust with your partner. Empathy obviously allows both partners to work on through turbulent times and must result from understanding and having a solid communication channel. We don't know what COVID and the instabilities we see around the world in 2022 will mean. But with the trust, we know that our story continues, and each partnership, I look forward to building on trust. What about you?
Thank you, Joe. I think amongst the other valuable nuggets, the one I'll be taking back with me will be on Rona, Brekkie, and was it Arvo for the afternoon. So thank you for that presentation. I'm delighted now to welcome Dr. Shlomo Sadoun, who is the CEO and co-founder of the SK Pharma Group. Shlomo will be speaking on finding the hidden gems in a competitive environment. By background, he's an entrepreneur with over 16 years of experience in the pharma industry. Of course, as the founder and the CEO of SK Pharma Group, operating in over 19 countries. They are the fastest growing generic company in Israel and the Balkans, with over 50 ANDA submissions in a year, primarily for the first to launch and complex molecules. I think he's also been driven and influenced by technology, the excellent startup culture and success that Israel has had. And he's kind of incorporated some of those aspects in what he does today. And so, listen, by way of background, he has a doctoral degree from the Royal Academy of Economics and Technology in Switzerland in public health management. And he's focused his research on the practical methodology for successful launches of orphan drugs, both in the US and in Europe. So with that, Shlomo, I'd like to hand the floor over to you. Thanks.
Thank you very much, Rahul. Thank you everyone for having me here. It's a pleasure to see people after all these years. I would expect that the time of this pandemic will end sooner, but unfortunately we see wave after wave. I can say that for us as a company and as a group, it's actually contribute to our internal development and focusing more in technologies that speed up, as you probably all know. And I would start with that. Thank you. So those are the topics that we're going to discuss today. In general, I will just emphasize that what we try to do in SK in general, it's to have disruptive technologies. I heard my colleagues here talking about double digit. For us, it's a triple digit that we need to actually achieve. This is quite, I would say, ambitious, but we believe that we can achieve that. So you all know the use of technology has actually elevated steeply over the years. COVID-19 has helped that. You can see by McKinsey that actually the first half of 2020 contribute to the last 10 years of development in terms of technology. What's interesting is that the customer that actually participate in this questionnaire had actually emphasized that they will continue to do that. The topics that I would say advance the most are virtual doctors. So we all can imagine that virtual doctor will become part of our life. It's already, but it will increase significantly. Electronic drug prescription. So of course, some of us could go to the pharmacy, but some of us had actually order them online, and this will incline. Online purchasing of drug, that's all connected, but it's, it cannot be one without the other. Home test and diagnostic. So of course, we all use home test for COVID, but it's not only COVID. There are a lot of envelope of tests and diagnostic that we're going to use at home. Online usage of different forums. So in COVID, we all become, Dr. Google. If we have a problem, yes, we can contact our doctor. Sometimes he's busy with other stuff, and it takes time to reply. And we just, pick up the computer, Google, and start to learn what we have. So in general, technology will really shape the patient behavior going forward. And it's quite interesting to see, and one can, anticipate or envision how the future will look like. People become more agile. Remote work, right? People working from their houses. They need to learn to manage their lifestyle and family with work. So this is something that we're going to see more. Less errors. Funny as it sounds, but when you work, let's say, from comfortable places, you can have less errors in work. And computer orientation and in general, embracing technology, it's something that we're going to see more and more. So companies that really want to kind of step into the new world will need to embrace technologies and will need to kind of invest heavily across the organization to make this happening. So this is just some of the figure why to go digital, for example. So HCP is actually embracing technologies in 65% more than what they did before. I'm talking about physicians, I'm talking about nurses, I'm talking about different people from the different stakeholders, that is actually embracing technologies. More than 60% of them is actually using some kind of software, or some kind of device that can help them to execute that. If we're talking about patients, so 70% of them is actually having some kind of digital, I would say, transmission in terms of health that they are using. 60% of them choose doctor over the internet. So this is interesting and funny, but once you just club to I would say insurance company, and then they're just gonna designate your doctor. Today it's not like that. You go to Google, you see who is the best doctor, and right now, you decide to have this doctor, and you just become more demanding. The same thing. So if you're talking about US, let's say that the prices are really high, you can imagine that right now patients go online and compare prices as you compare flight prices and as you compare other things. So it's really kind of a digital world. Yeah. So what you can see here is that's what we can expect going forward. So remote diagnostics, we talked about it before, but I think that it will enhance not only because of the pandemic and the access that we have to physician, but in general, it's just more comfortable. And as the tools and the technology allow it, we're going to use it more and more. Self-administration. So a lot of drugs that been actually furnished in clinics right now will be converted, and as much as they can be taken at home to enhance, let's say, lifestyle, this will be definitely something that we're going to see an improvement. Remote monitoring, all kind of wearable devices that can transmit to doctors will be something that will be highly embraced. Yes, so in general, you can see that the patient have more power. If before that we all kind of focusing on the physician, I believe that in the new generation, we're going to focus on actually the patients rather than the physicians. What you can see here, you can see actually the bold in black. Those are the areas that I would say grow the most and can generate most of revenues. I'm sorry that it's small, but still, we'll try to help you with that. So you can see virtual health, of course, is one of the most boldest and areas that we're going to see a huge development and increase. Data analytics, this is very important. A lot of companies are trying to find what are the ways, what are the pathways, what are the strategy for us to grow. I believe that you already have it in the organization, or probably you have it out there. You just don't know to leverage it wisely in order to find the hiding gem within your data, within your organization. And data analytics will definitely contribute to this change. Of course, you have other areas that are interesting, but they all involve in collecting data, in providing diagnostic, in having more information that will help you to get a smarter decision. So finding the hidden gems in a competitive environment. I would say that if we look on portfolio manager or business development, I mean, best of minds is sitting and trying to build the right portfolio. And I guess that they're all doing the same exercise, or not the same, but 80% the same. They're going probably to IMS, they're looking on the most growing molecules. And by that, they try to understand what will be the trend and build some kind of pipeline that will make sense. Today, more than ever, we can do that with the power of technology. So we in SK, for example, do not use IMS. We do not use IMS because I think that it's disturbing us to get smart business decision. Why? If we look on the same data and information that everyone is looking at, it might be in big percentage that we're gonna think like them. If we're gonna think like them, we cannot differentiate and have any value proposition that will differentiate us. And as a result, we just try not to use the classical methods that everyone using. And we try to embrace technology. So running a complex query using artificial intelligence, this is something that we do. We do that if you're going to think about the business development that run portfolio management selection. So he collect a couple of information, he tried to cross-match them. In best, he will do that with Excel. If he's really good, he will do that with Access. But he have only handful amount of activities that he can perform. If you can imagine that with a machine, I can build up a line of query that will engage more than 70 factors, 70. A human cannot do that. He just cannot. And we can with the power of AI, and we do that. After that, okay, you had a good assumption, you build a good methodology, now move to the second stage, ML, machine learning. So you get your figure, you got your understanding, that's great, but let's see what the machine have to say about that. And then you run the data on the machine, and the machine show you some anomalies that you didn't recognize or you didn't saw before. And then you start investigating them, and you see there, you know, hidden gems that you didn't figure that you can ever get to them. So the data have to be stored at data silos. We talked about it before. Data is very important. Any organization have to capture data in a proper manner. Data science team have to be in every organization. That's what I believe, but it's not it's, I would say, it's written everywhere, but I would bet that not a lot of companies doing that. And they need to be in charge of the data. Data scientist platform, personnel have to work closely with the BD profile manager, but not only. They can work literally with everyone in the organization, from the supply chain until IP to BDs. Any task that's been done, I would say systematically and repeatedly, can be improved by data scientists. The aim is automating, improving and enhancing the way that we perform activities. ML findings will be reveal hidden gems. We talked about it before. I can give you one example of the way that we utilize ML. So we talk about prevalence, for example, and I investigate the orphan disease. So if you go and try to investigate orphan disease in specific areas like MENA, okay, you go to Saudi Arabia or you go to UAE, you're only going to find very low information about the prevalence of different diseases. And it will be very hard to find those. I can advise that with ML, we're using all kind of data that we integrated, and we force the machine to give us some kind of clue of how we can find this information. And believe it or not, we did find it. This is a machine, we call it the Compass, that we use in SK. It's covered more than 75 markets, and it have over 70 filters. Things that I think business development unit that count 10 people do in 2 months, we do in literally 7 minutes, I believe, or maybe less. And the data is much more accurate than whatever the team can actually understand. So imagine this. Imagine that right now every square here represents the size of the opportunity. That's what you see on the upper side. On the lower side, you see all the indications that we are looking at. The size, again, of the square is the size of the opportunity. You have in one place, think about it as a master, I don't know, master Google of your world, that you can get all the information that you want in 2 seconds. But the beauty is not only getting the information, which other companies do that, but you can cross the information and the information can talk with each other. So think about 5,600 different sources that we cover today. So we cover more than 5,600 sources, right? We cover 75 markets. It means we translate close to 28 different languages, and it all need to be processed, unify, and deploy in a way that the data can cross-match. And I think that this is the challenge that we are facing and we're doing in SK. In SK, we have an independent company by the name of Drugs Intel that provides services also to external companies, but mainly serve the mission of SK of triple growth year over year until 2025. A differentiated strategy for successful hybrid generic launch. So we talk about the new era, we talk about the new world after COVID. We will talk soon about also new generations. But again, we're trying to find, I think that's what everyone is looking for. What are the next product that I can bring that can bring value to the organization? So tailor-made therapies, that's where the world is going to. One size fit all or blockbuster drugs, we don't see them. If you're going to look on the pipeline going forward, blockbuster drugs had reduced in more than 60%, if I'm not wrong. That's the number, 60%. So you can see more drugs approval, you can see more tailor-made drugs, but you less see those apixaban of the world, as you mentioned. The payer becomes smarter and pushing companies towards evidence-based therapies, right? It's not only that you're gonna bring therapy into the table and say, look, it might help with blood pressure. They will scrutinize you and ask, okay, how does this differentiate from what I have right now? Why should I pay more? And you need to come with the answer in order to kind of penetrate. Patients are profound in utilizing technology and read professional posters. We talked about it before, people become smarter. They go online, they check. You cannot go to the doctor and he will give you, you know, what he gives, sorry to say, to your mother or father, a list of 7 or 8 drugs, and they're gonna take them 3 times a day in the morning, noon and night. The new generation, we'll talk about it on the next slide, X, Y, and Z, it's a generation that read. It's a generation that demanding, he knows. And if the doctor has prescribed him something, he go back home, he check it, and if he sees something better, he scrutinizes his doctor. And he come and say, why did you give me this? There is another drug that is better. I want this drug. And in the end, I believe that it's moving from the physician to the patient. That's the thing that you need to take with you. Social responsibilities, lifestyle, uniqueness, all those things that are more, I would say, associated with fashion will be more associated with drugs. That's what I strongly believe. Patient willingness to pay more on treatment. So it's not only that they're going to be more demanding and say, okay, no, I want this new treatment or this combination drug or this sustained release drug. But if the payer not going to pay for that, although they will try to do their best not to pay, they will pay. They will know to value better products. And that's what the future is actually showing us. A collaboration between mega brands like Mercedes and eye drops line is not imaginary. So yes, probably I'm talking here and people look at me and think, okay, it's a bit crazy, this one. But I'm not that crazy. And you will see that will happen because brands are trying to find beyond, I would say, the product that they are selling. They're trying to give this, this feeling of care, okay, to their customer, which is beyond. And I think that if you can improve with eye drops the visual of a driver on MG 63, right? Because he can see better, and then as a result, he can go to new speed that he never experienced before. This definitely have a place in the future. Reliving the patient journey, we talk about it one pill that can actually eliminate 3 or 9 or 8 different pills, this is something that will be highly valued in the future. So those are all the factors that I believe that need to be taken in consideration when we build those hybrid generic launches and products. Treatment adherence, that's clear, treatment compliance, patient lifestyle. Imagine or not, patients don't want to take all kinds of drugs that is not fit into their lifestyle. They don't want to go to hospital to get drugs on one hand. On the other hand, they don't want to get a sachet if they can take a tablets and finish that with literally 3 seconds. Product features, right? They want the product to have a good taste, nice color, even colors. If it's a product that is really commercialized widely, you're not gonna believe that, but in social network, they might talk about the pink pill, the pink small pill. It's really cool, it's really nice. Those kind of things will have some weight. Collaboration with non-pharmaceutical high brands. I talk about Mercedes, but it's not only Mercedes. There will be probably other brands. You can go with your imagination. I'm already close to the moon, so you can do halfway and it will be good. Product additive, right? All kind of product that maybe you take it, but it influences different vitamins, and then you can give a vitamin to kind of help that or augment that. Active pharmacovigilance. Active pharmacovigilance means don't do pharmacovigilance for the sake of pharmacovigilance, but do that for the sake of finding additional added values. With pharmacovigilance today, at least in SK, I'm educating them to try and find things that might contribute to my future product. Right? If the taste is not good, if, I don't know, they feel bad 2 hours after, we write all those things. And then we try to find a combination product. By the way, we don't develop ourselves, but there is good minds globally that we can take the product from, good mind think alike, that we can leverage. Collecting user experience, right? You can imagine that today you have different forums and users are actually speaking loud and advising what is good and what is bad. So collecting this information. KOL and healthcare professional connectivity. We talked about it before, and this is an important thing that need to be kept. And continual research and development. See if we have anything that wasn't revealed through this slide. Building an agile team to cope with the marketing challenges of the future, generation Y and Z. At least when we build a company and when we're looking on the future, we're looking on the future generation. Yes, sorry. It's less sick at the moment and probably they consume less drugs, but their lifestyle will push them to do and to utilize all kinds of drugs that the older population is actually not using. They contribute to close to 52% of the general population. So that's quite a lot. And that's why we need to really focus and look closely on this generation. So identify the generation future needs. This is something that is important, but it's also connect to early engagement. We need to make sure that we engage with this generation early in the process. A mission team that will be involved from youngster, right? Youths. So you can imagine that you have your own business development or marketing team that try to think and understand what they need, but you really need them to sit in the table in order to understand what they need. So bring them. I mean, even someone which is like 20, 22 years old, bring him into the table, hear what you have to say. You're going to be imagine that you can learn from everyone. That's what we like to do. The common merits is they are technological oriented and social network native, right? You need to communicate to them in those channels. Utilizing social and technological capabilities, online omni-channel. So they buy their things mainly online. Mobile connectivity, and you will see that on the next slide. Some of them, I think that it's 50 or 60% of them, is actually connected to their mobile 10 hours a day, 10 hours a day. It's ridiculous. Data consuming, they consume data like no one else. Online social connectivity. They almost always online and always care about what other is actually seen. So we said that they contribute 52% of the global world population, which is quite a lot. They have a firm agenda on social responsibilities. They engage with social media talents, right? This is something that can be taught when you do all kind of marketing campaign to promote your drug. They aiming for more environment friendly. We heard that environment is quite important in the agenda of many pharmaceutical companies. I think that it will be good if they're going to highlight that. They are focusing on patient uniqueness. So they basically would like to be unique, and their lifestyle is very important to them. So this is something that need to be taken in consideration while you design a product to those patients. Social appearance and Dr. Google, right? Everything that they want to know, they go to Google, they Google it, they try to understand what is their problem or what is their opportunities. So that's why hybrid generic or product that can relieve their life will be high in their, at least, wish list. Their strong desire to instant solution will increase remote health. They have a problem, they want to know now what is their problem. They don't want to wait for an appointment in 2 or 3 weeks. They want to get an answer now. And they will connect to all kind of remote health app or services in order to get their answers. The payers, they will struggle with defending all generation product. So we talk about it that today to at least our mother or grandfather, they come and provide drugs and they tell them, look, that's what you need to take. And sometimes the physician knows that there is a better drug, but the payer is actually restrict him to give that. And I think that this slowly but safely will vanish with this new generation. We will see high trends in the usage of combination product, hybrid generic, we talked about it before, and treatment of numbers of comorbidities in one treatment. A rising trend towards ADHD. Unfortunately, this generation will probably consume more ADHD drugs. We already see that now. Depression drugs as well. And it's because of the impersonal social deficit, right? They meet with less people. They work more with their phone. They stay more with their computer, stay in the room. All those things will generate more consumption of those particular drugs and areas. Those are the comparison between them. Let me just have it here, but it's too small. Yes, so as I said before, you can see that around 50% of Generation Z is actually spend more than 10 hours in his phone, which is quite crazy. You can see that 40% of them is actually have addiction to their phone, and they actually said that. And 92% of them have digital footprint, which means that you can find them in the net and you can actually target them different product. They do YouTube and they do different stuff. What you can see here is you can see that the new generations have their own uniqueness. And in general, you need to focus on this uniqueness in order to kind of tailor-made them a treatment that will fit to their own product. Yeah. So here you see the 5 forces of potential disruptions in the biopharma industry. So prevention and early detection, this will be a key element that we need to kind of focus. Customized treatment, we talk about hybrid generic, we talk about unique product. This is something that we definitely need to have a closer look. Curative therapies, we can see more and more gene therapies that coming into the market and will change the paradigm of treatment. Digital therapies and digital diagnostic, but digital in general will change, I believe, the world. And precision interventions. This is something that is widely important. So as a summary, for a pharmaceutical company that won't encourage technology, it's culture. It's not only encourage technology, it's implementing technology in everything that they do. I believe that it will be hard for them to be on the first quartile. Team education and training have to be there. You cannot do this change in technology by writing in the presentation, that's what you're going to do. You need to really give them the tools to do that. Leveraging technologies to sharpen the company competitive advantages. We talk about what SK is doing. We have internal tools that with this, we do things that I believe are disruptive in the market. Positive digital footprint build-up for a company. You need to do that early in the process because they can find you and you're there. Added value drugs will be high in the agenda of new generation in general. And data in the organization is important. You need to find it, you need to store it, you need to utilize it. And generation Y and Z are representing most of the world population. And it's important that company will give them the right attention and will try to broad screen them whatever they need. There are endless number of blue ocean opportunities if you just employ the right futuristic glasses. Thank you very much.
Thank you, Shlomo. That was a very thought-provoking presentation. I think many of us don't really think about employing disruptive technology in what's considered a very, a very traditional industry. So thank you for that. I remain mindful of timings. I see that we have no open questions in the forum, and I know that for many of you, you have meetings lined up. So let me just take the opportunity first and foremost to thank all the panelists. So I want to thank Shlomo, Joe, Nadeem, Deepak, and Alejandro for their contribution and their presentations. I'd like to thank all the audience, our colleagues in business development, and of course, last but not the least, let me take the opportunity to also thank Jane and Christina, the organizers. And on that, let me wish all of you a great conference and happy business development and partnering opportunities over the days ahead. Thank you.